Businesses and community leaders are keeping a close eye on House Bill 1002. The bill would cut state income taxes from 3.23% down to 3% by 2026. It would also eliminate the gross receipt taxes on utilities and cut the sales tax on certain manufactured products. The main sticking point seems to be the plan to cut personal property taxes on some businesses. The tax is commonly referred to as a 30% depreciation floor, which says manufacturing equipment will be taxed at least 30% of its original value, no matter what it may be worth. Members of the Evansville City Council are among those opposing the bill.
It brings in about 1/3 of what the city brings in property tax values. So you got real property tax, which is your home, physical business, whatever. So the structures, that's real property. And then you have personal property on businesses, which is, if you go to a factory, the machinery and whatever else.
The City Council sent a letter signed by all members of the council to state lawmakers, urging them to either vote against the bill or change it.
If they're going to get rid of this property tax source, which may help businesses will be happy, the taxpayer will be happy, but we're going to need a replacement as a city to function.
But supporters say that only one part of this bill would have an impact on local government.
Affects local government is the 30% floor, and that is spread out over a number of years. And we've calculated that would only trim their revenue growth by 0.6%.
He says the complaint from those opposing the bill does not look at both sides.
Complaints about, reduces revenues doesn't take into account the additional revenue that may come from them from businesses that expand or come into our state because of these tax changes that we're making.
In Evansville, Ann Powell, Eyewitness News.